G'day there. Welcome to the week ahead with Alpha Wave Trader. I'm Murray Dawes, and I'm continuing to focus on the S&P 500 for these little brief updates because it really is a fascinating situation that we find ourselves in currently. This year is shaping up to be an interesting one, especially with the about face by the Fed, having pulled back from their plans of raising rates over the next few years for now, and throwing out the chance that they might adjust their balance sheet runoff, which I think is the biggest news of all, is changing the situation, I guess. And you have to revisit things and have a think about whether the Fed has now changed the whole dynamics of the market. So the technical situation that they created with their plans may now be negated if they've changed their plans, because they are such a central pivot for the market. So I'll just quickly overview that and give you my reasons for sticking with the technical situation, but I'm just very aware of what effect the changing of the guard with the Fed can have on the market. It really is something that you need to understand. So if we start with this quarterly chart of the S&P 500, this is the E-mini S&P 500, so the futures on that market. And this gives us the cleanest picture of all of the trends that we see. You can see I've zeroed in on the buy and sell pivots on the quarterly basis, which we've had a look at before. The program doesn't pick them all up, just a quirk of them. That's actually a buy pivot there before the big rally. Then we have a sell pivot there, a retest of the low there, so that was 6 months, a rally back to the top of that sell pivot candle, and then a sell off to retest the low. An important point, that one. And we've got the buy pivot there once it closed back above the lowest price candle on the quarterly, and that buy pivot setting up the move to the upside again. So that's the first point. The buy and sell pivots on a quarterly basis, very important. Twice was a precursor to the crash, and we've in this very strong uptrend, we've had a couple of false signals, and really this is the only sell pivot that didn't see further selling. It ended up creating the buy pivot there, and you can see the retest of the low of that buy pivot candle, an important point again before the rally. So looking at where we are right now, and this is why it is such a fascinating situation, is we have this very strong sell pivot candle, really quite a wide one. You see how large that is compared to all of the price action that's come before it over the last few decades. I mean, that is a serious sell pivot candle. And my contention would be, at the very least, that before we see prices closing above the high there, especially on a quarterly basis, we are going to see selling pressure up in this zone from the midpoint, which is an important level, which we're already above, and the sell zone of that candle, which is from the 75% to the 87.5%, is a very important area of resistance. And all I would be saying at a very high level would be that this rally that we're seeing will at the very least see selling pressure back to the midpoint as a first point where it should get to, at the very least, and very likely that it will retest the buy zone of that candle, which would be down around that 2400, 2500 area, which is many hundreds of points lower. So even if the market is going to eventually break out to the upside and the Fed has, changed market dynamics by backing off completely, so this is what we could be heading towards, there should still be a reaction from this area in the market where we should see selling. If we are heading towards some sort of a recession scenario over the next year, with the softening of data, people are starting to make calls in this direction. Well, things could really weaken off, and it would be from this area from the midpoint up into that sell zone of that sell pivot candle. So if you look back in the past, you can see the quarterly price action closed below that 10-period exponential. It then saw a rally in that next quarter, which then failed. And that's when we ended up seeing a few years of selling. Again, closing below that 10-period exponential, the next quarter, a big rally, which is then rejected before the selling comes in. If we end up seeing the close back above on a quarterly basis, above that 10-period exponential, then watch out. And if you get the buy pivot, of course, that is saying that prices can head a lot higher. So this situation right now is we've had that close. This is the rally going back up into the guts of that candle, taking out all of the shorts, getting people bullish again. If this selling pressure is a precursor of what's to come, which it has been so many times in the past, the opportunity is up in this zone, and the Fed may actually be creating the situation which rallies the market up into that major sell zone. So we've already had a massive rally over the last month. The Fed announcement last week has caused another rally, which has pushed us up into key resistance areas. So even if we're heading higher, I'd be saying that the opportunity is to be buying puts beneath the market, and as I said last week, would be to create the straddle at the point where you think there's a chance for high volatility. So from here, the higher it goes, I'd be looking to buy puts at that midpoint of that candle around 26.30 is that midpoint of that quarterly candle. So if it could get up into that 2800 area, that would be the exciting trade to make, and you'd need to buy some time, but I'd be looking to buy puts with that strike, and then I'd be looking to buy calls against that position once the market actually got there. And with the profits you've made on the puts on the way there, you can buy calls against the position. So if you had 2 puts, you'd buy 1 call against the position, and then you'd be exposed to a straddle like outcome. So you'd make money on a big move higher or a big sell-off. And as volatility crunches on this move higher, and we have moved into a higher volatility environment on the bigger picture. If you'd read my articles on the VIX and the long-term moves in the VIX. So I think that is how I'd be looking at this market from here. So let's have a quick look at what all of these key levels are, just as a recap. This whole rally from 09, the massive rally, I've got the sell zone of that in this area, 2400 to 2650, 2700, and we're actually above that level now. And if we're looking at this sell-off, we've already had a sell-off to the midpoint of that is that blue line there, and now we're rallying up into the sell zone of that wave. So that's this whole wave since 2016. And so often the market does the retest of that midpoint and then rallies to check out whether the selling pressure is still there in that sell zone of the wave before turning down, and usually heading towards the buy zone of the wave once that midpoint gives way. So that range, from around 2660 to 2800, a very key resistance area for this market. And then we have that area around 2800 to 2870, which is the really the highest sell zone in this whole structure, where the market could get to, and the Fed, the rally that the Fed's creating could actually take us all the way up into that zone. So we'll see how that plays out. But so many areas of resistance coming in around here, and I would say we are going to be retesting these lows around that 2470 area before we see a breakout above the highs there. So really a lot of things pointing to volatility within this candle before it manages to break out at all. So there should be plenty of money to be made in trading that volatility. So just very quickly looking at it from that weekly perspective, we see this sell-off from the highs, this wave down, very strong wave down, and now the market bouncing sharply into the sell zone of this wave down. And if the market is going to sell off, if there's any weakness around at all, you will see selling from this area before it manages to bust above the high of that wave, which is around 2814. Also, the 200-day moving average is coming in around 2750. We have the midpoint of this range that it was caught in for the last year, coming in at 2700, which is where a lot of positions are accumulated. So there'll be a lot of selling pressure there from people who will feel relieved that they've been allowed out of the market if they were long and stressing out when the market was plummeting. So there'll be a lot of selling pressure in this zone just from that point of view. The key sell zones are coming in this area, and all we need to see is a bit of weakness from this zone, and the music can stop very quickly. So that's why I'm just very interested in following this along from this point, especially after the Fed creating that big rally last week, which pushed the market up into the really key sell zone area. So can this rally, continue? Yes, it can, but the higher it goes, the more selling pressure it is going to go into, and it's becoming so overstretched, becoming overbought into this major selling pressure that it won't take much to have a good shakeout of positions. And I'm not saying that it's not going to end up heading higher, but just that there is an opportunity to capture this leg lower after this overbought condition, to set yourself up into a good position of having a straddle-like payoff, of being able to make money whether the market rises or falls. And that it really is the biggest suggestion, I guess, I could make about the opportunities that we're seeing, because it's a very interesting setup currently. So that's it for this week. Let's see whether this rally can continue after that Fed announcement last week.